All right, thank you so much. Global stock market and the dollar trended lower on the U.S.-China trade tensions intensified, compounded by President Trump's tariff threats and the possible European interest rate cut. Safe haven assets gained strength, suggesting investors caution amid ongoing geopolitical shifts and economic policy uncertainty, sparking fears of economic disruptions across major markets. Now there's been this back and forth around the global space, and I have Mr. Gbenga Ogurinola, who is an investment and financial advisor. He joins me from the United Kingdom for this conversation. Thank you so much, Mr. Ogurinola. It's good to have you. Take me through what you make of the back and forth with President Donald Trump, this tariff issue, and what it means for the entire global space. We've seen this flip-flop in the market in recent times.
Yes, thank you, Tolu, for having me again today. It's been a season of onset of a lot of uncertainty in the global market since Donald Trump came to power. The tariffs war has continued, and it seems as if it's not abating. Each week or each month, we have a new case. And even though there's been some negotiations around the tariffs for some major economic players like the United Kingdom, like China, currently the European bloc is also negotiating. But it seems as if even despite the negotiation, something comes up again after negotiating. Currently, we are looking at just in the last 24 hours, there's been the issue of the tariffs on steel that is going to be across board, and it's saying that probably the United Kingdom might be spared, but that all other economy that is importing to the US will be paying a tariff of about 50%. So it's really been a season of uncertainty where even the major economic forecasters and also the policymakers are unable to really make or predict the situation of things because of the global situation. So it's very uncertain, you know, and people are just more like the economy are becoming to be more of a reactionary economy rather than being a proactive economy. So that's what we're having currently. But globally, from the last time I was there till now, we see some stability in the global markets, particularly in the capital markets. We see some stability there. We see some stock exchanges and ASI index year to date rising and you know, coming out from the reds, and they are beginning to show some promises. But generally, still a very difficult and uncertain period in global economy.
I'm just reading here that the UK is temporarily exempted from the increase, just like you said, but a levy remains 25%, and UK trade officials are relieved at the new clock. Now, let's see, moving forward, President Trump is all about protecting America. We in Nigeria here, we're already thinking about Nigeria First initiative, also trying to protect Nigeria. At a point, I think the United Kingdom will start thinking of protecting the United Kingdom. Where do you think this will take us to when everyone starts to take over this protectionism policy and all of that across the board?
Yes, I think it's already happening where countries are beginning to look inward before they even think about investing externally. Well, it has its own merits, but there are also some demerits about that. We believe that the world is a global village where there should be crisscrossing and where you are able to, you know, develop other areas. But we are seeing more of countries beginning to look inward now. I remember when this whole thing started, I actually said that we're going to have this kind of situation where people will begin to look at, okay, what can we even do within our own within our own space? I mean, how can we be self-sufficient? And that's what most economies are looking at now: self-sufficiency in almost every area, especially those areas that are very fundamental to the survival and growth of the economy. Already, if you take a look at the stock markets, you would notice that in the last couple of months, the European stock markets have actually risen compared to what they used to. They used to be the laggards when you talk about major stock markets before now. Always you have the Dow Jones, the S&P, NASDAQ leading the pack while the others follow. But what we are seeing now is that people within this space are beginning to invest more in their own countries now. The kind of attraction that the US had before is beginning to lose that attraction. And a lot of people are asking, a lot of fund managers, a lot of investors are asking that, is this the end of the United States dominance in the financial markets? I want to say that it's probably the beginning. And if care is not taken, might also be the beginning to the US are beginning to look inward. What are those investments that we have locally that are safe and we can invest the funds in, and that is what we are seeing at play. So it's going to be everybody trying to look at maximizing the investment opportunity that they have within their locality before they think of other spaces.
We see that some markets are trying to cut rates in recent times. I'm seeing that also affecting the markets. What do you make of that? Well, Nigeria, we're still holding on to rates, though.
Yes, we still have a high inflation and interest rate in Nigeria, still in the 27.5%. That's the interest, and the inflation about 23.7 or so.
Correct.
Also,
correct.
But you see that the thing is that because of the unpredictability of situations currently, it's also a bit difficult for policymakers to determine what the interest rates projections will be. Most of them base the interest rate projection on the inflation. And I'm sure in the news there's been this pressure from Trump on the SEC presidents to lower the interest rates in the US. But you discover that the inflation rate for most economies are still relatively stable. And because of that, they are not thinking of cutting the interest rates yet, even though they want to cut the interest rates, but the inflation is still, it's not going down. For most of them, the inflation rate still remains about the same from where it was at the beginning of the year 2 months ago. Like, for example, the FTS, the United Kingdom interest rates, even though it's gone up in the last 1 month to about 3.5 from 2.5, but they are still uncertain, whether to cut or increase the interest rate because of all these tariffs war and all that. You see that the American inflation rate too has been a little bit stable, even though it went down in the last reports from 2.4 to 2.3. But you see, everybody is careful. In the other economics too, you see that the inflation rate is still about the same or losing maybe just about 100 basis points. So it's not certain. And because of that, most of them have left the interest rates, the same as what it was in the last 2-3 months. But there's a keen watch on all this to see where these tariffs war and the impact, where it leads most of these economies. And it will be, like I said, economies are becoming more of a reactionary now rather than being precautionary. But we'll see how things goes. There's still so much uncertainty, but in the next, just like we have a little bit of clarity compared with what we had about 2-3 months ago, I believe that in the next 3-4 months we'll have more clarity, and the policymakers will be able to actually make more adjustments and become maybe more proactive in their task.
Gbénga Ogunrinola, I must thank you so much for your time. Thank you for your time on the show. Really appreciate your brilliant contribution as always. Enjoy the rest of your day.
Thank you.